Is now a good time to buy a house? Look, if you have a long-term horizon or even a medium to long-term horizon, there's no doubt that housing is more affordable today on the nominal value you have to pay for it. The servicing costs, of course, will have stayed relatively, similar just due to the higher interest rates. But one thing's for sure is that there is a cycle with the interest rates, and it's unlikely they're going to stay elevated forever. They will at some point come down. So when you take the life cycle of the property, it should be cheaper to own a property today than it would have been if you'd bought 2 years ago. So my advice to buyers is, we're not just buying a financial asset, we're also buying something that we get value from the use of. So if you can find in this market a house that you're happy with, that suits your family, and that that you're comfortable with the borrowing level, then now's a fantastic time to buy, and I'm sure that over the medium to long term you'll do very well. Just don't expect any short-term capital gain in the next couple of years, I think. In terms of the barriers for buyers getting into the market at the moment, the big one would be finance. Now, it's both the cost of finance and the availability of finance that are a problem for buyers right now. And bearing in mind, we've gone from a low of 2.5% interest rates to what might be well over 6 now, is an absolutely astronomical increase in borrowing costs. So on one hand, buyers are now looking at what they can afford to borrow based on their servicing ability, and then on the other side of the fence, the banks are being a lot tougher on who and what they're lending on. And I remember earlier in my career, banks weren't that worried about what they were lending on at all. In fact, they just wanted to know that you could pay the mortgage. So the due diligence that the bank did was on the borrower, whereas now the banks are doing a whole lot of due diligence on the property itself, and actually declining finance on a lot of properties just for small, relatively, innocuous issues in building reports and things like that. So getting finance and then the cost of finance are the two biggest barriers for buyers at the moment. Rateable values, how accurate and predictive are they? Look, the truth is that rateable values are based on a formula that the council uses to assess the rates, and they really don't have a bearing on market value, on true market value at all. You can see trends, like you can see potentially how much percentage above are properties selling below or above RV. The problem with that on an individual sale basis is that they are all over the place, and the average is just the average. So even that kind of analysis doesn't really help you. The truth is, a house is only worth what two parties will transact it at, and that is driven by things like competition, how many supply and demand, how many other properties are on the market, and things that there is no mathematical formula for. So my best advice to the public is simply to take rating values with a grain of salt. Really what you need to look at is other sales in the area with similar features, and what has someone in the market paid for those features, and how does that relate to yours.